Another thing that's maybe not so much changed, but I've definitely seen it progress is instead of people in accounting and finance, acting in a silo, I think the buzzword is being business partners and really understanding the business. But I think that the concept is absolutely more than a buzzword, which is to get into the business, understand, what the business is trying to do in order to be a better service provider within the business. And I think that probably holds true for more than just accounting functions. You see the same out of IT or HR or any of the sort of standard G&A functions. The better you understand the business, the more useful you can be, and the more time you can kind of spend engaging with other business units and understanding how they do things, the more value you can add.
This is Net Learnings, the podcast that keeps finance and banking professionals ahead of the curve. In each episode, we focus on career growth and practical advice, while mixing in the occasional war story. Join us as we tap into the minds of leaders and experts at some of the world's most notable financial services firms and enterprises. Let's get started.
Hello and welcome to Net Learnings. I'm your host, Kyle Peterdy, and I'm really excited about today's discussion. Our guest is Koert VandenEnden, CFO at Kardium, a medical device company headquartered in beautiful Vancouver, Canada. Koert has over 20 years of finance experience, starting out in audit and assurance with KPMG before transitioning into the tech sector and ultimately the life sciences industry, where he now boasts extensive experience, having held C-level positions with Ostara Nutrient Recovery Technologies and Arbutus Biopharma, to name a few. We're thrilled to be able to pick his brain a bit today and to try and download even just a fraction of his financial wisdom. Thank you so much for joining me today.
Great, Kyle. Thank you for hosting me.
When we chatted, that you're super passionate about Kardium and the work that's getting done over there. Can we maybe start with that? Tell us about the company a bit.
Sure, Kyle. So Kardium is a medical device company, and as you mentioned, we're based in beautiful Vancouver, British Columbia. We have developed an extremely advanced system for the treatment of atrial fibrillation, and it's called the Globe Pulsed Field Mapping and Ablation System. Atrial fibrillation is something that affects about 60 million people globally, so it's an important medical condition to address with an extremely large target market for a medical device company. Our Globe system is in the late stages of a long development path, and I'm really excited to share that earlier this month, we started treating patients in our IDE study, which is a global clinical study of our device. And we expect to use the data from that study to seek approval from the FDA in the US and regulators in other markets.
Wow, that's awesome. That's incredible news. Congratulations to you and the team.
Thank you.
I want to talk about the finance function a bit, but before we go down that road, maybe you can tell me just in your own words, what does a CFO do? Like, how would you explain it to maybe a non-finance person or a young child?
I do have 3 young children of my own, so they often ask what I do. That's a good question. I mean, at a high level, a CFO is responsible for the financial stewardship and the financial health of a business. And while that sounds, easy and good, in reality, it means a lot of different things. On a day-to-day business level, I would say I'm responsible for ensuring the financial health of the business. So in a growth company like Kardium, that means making sure we have enough cash to carry out our growth objectives, and also making sure that once we have that cash, that we spend it responsibly and efficiently in pursuing our mandate. I'm also responsible for what I like to call the bread and butter of finance. So that's things like high quality financial records, financial compliance, tax compliance, and other things needed to be, compliant and operational within the many rules that exist for a company like ours.
You're in health tech now, medical devices specifically, but you've also worked in biopharma. So we'll sort of call it life sciences broadly. Mm-hmm. And I have to imagine there are obviously nuances around working on a finance team in that sector that make it much different from, say, like a manufacturing or logistics company, even just the compliance side that you alluded to. So what I'm wondering is, how important is it to be technically well-versed in the industry or sector that you work in versus, just having really strong general financial acumen and sort of learning the business and the KPIs and how it all fits together as you go?
So I've always prided myself on being more than just a finance person or more than just an accountant. And I like to build teams that really engage in the business and understand our business. That said, a finance team is intended to be experts in certain things, and that expertise is not, on the medical side. So
Right.
whether it's medical devices or biotech, I don't expect our finance team to go out and get a medical degree in order to be able to understand what we're doing on the science side or on the engineering side. But I do expect, as a finance team that we, are inquisitive and learn about the business and take the time to figure out what makes our business tick and what makes our, business different from our competitors and what makes it stronger than our competitors, and thereby just be more effective business partners, if you want to use some kind of, cliche terminology.
Some business school terminology.
That's right.
Okay, so we'll maybe sort of change directions a little bit. Joining the C-suite of an organization is obviously a very big deal and clearly a long journey, because CFO is certainly not an entry level role. Let's wind back the clock a bit. I want to know, on career day in middle school or high school, was young Koert presenting to his class how he just couldn't wait to be a CFO one day? Like, how did that happen?
It's funny, and I laugh because it's actually a little bit like that. And even before high school career day, when I was in elementary school, I used to have a ledger book where I'd keep track of the money that I earned cutting grass.
Really?
And it had, debits on one side, credits on the other side. And I enjoyed that. I kind of enjoyed keeping this financial record, and I enjoyed that from a very, very early age. So, although at the time I probably didn't imagine being a CFO, largely because I really didn't know what a CFO did, or that it even was a role that existed. I definitely always thought that I would have a career in some sort of financial field. And so although you joke about it, I do think I was always destined to be a CFO or something like that in my position.
It sounds like you were purpose built for this. That's wonderful. So when you got into the CFO chair for the first time, was there anything really sort of surprising or unexpected about it? Like, did you go in with some preconceived notions that maybe proved to be completely false, or that proved out exactly how you expected?
Parts of it proved out exactly as I expected, and parts of it were very different. So I'd say the parts that were expected was that, I needed to have expertise in certain areas. And another part that was expected is that I certainly didn't have the expertise in all the areas that I was exposed to. The part that was unexpected was I thought that there would be a right way to carry out the role, and sort of a playbook for CFOs that you just had to be exposed to and learn. And it's really been very different. Every day is different. You really got to think on your feet. It's really important to engage with, the other members on the executive team, and try to figure out the best way to carry your business forward and make it a success. And there's no true playbook for that. So I think past experiences come into play, but being diligent and thinking through it all the time is really important.
That's interesting. We often always look for that sort of map to follow. And it turns out that in so many areas, you actually need to really kind of chart your own course and learn quite a lot as you go. So that's very interesting feedback. So help us understand maybe your professional journey a bit, if you would. Like, you came out of post-secondary, joined a Big Four accounting firm, and I get the sense that this is a fairly logical path for someone that has, executive level finance aspirations. Is that accurate?
I think it's a fairly logical path. If you look at many CFOs, they either come from a background like mine, which is starting with, an accounting designation, spending some time in public practice, and then going out and getting corporate level experience. Another path that people follow to get into the CFO spot is through investment banking, and they really understand, the public markets piece of it more. And then they, sort of back their way into that accounting knowledge and financial reporting knowledge through the role itself, as opposed to through their background. So there's a couple of different ways of getting into the CFO role. For me, as you say, I went the accounting route. So after getting my undergrad in commerce and finance, I worked for KPMG and got my chartered accountant designation, which is now the CPA designation in Canada. And for me, that was a great path to follow. And it is a natural way of getting into the role and getting exposed to a lot of that background that you need to be successful in the CFO role.
And I guess as an accountant, you see a lot of businesses, and you get to peek under the hood, and you see good management teams and bad management teams and good businesses and businesses that have areas for improvement. So I have to imagine that that's an interesting just window of exposure, if nothing else, but also, of course, technical skills, technical accounting skills, and understanding tax and assurance, right?
Yeah.
What percentage of people would you say that go the accounting route? And if you become a CPA, I think it's the CFE exam. How many of them actually stay in accounting, do you think, versus go a corporate route like you did?
I wouldn't have an exact number, but I would say less than 10%. I think many people,
Really?
at some point or another, leave public practice and go into corporate accounting.
Hmm.
Some people leave earlier, and some people have, more of a passion to stay in public practice for a longer period of time. Like you say, the interesting thing about public practice is you get exposed to so many different opportunities in a really rapid fashion. So you go through, say you work with 20 different clients, you'll go through 20 year-end cycles in one single year and sort of observe in 20 different ways, some teams that do things differently, and maybe, some things that are best practices and some things that are perhaps far from best practices, but you can learn from all of those things. And yeah, you do get to peek under the hood. You get to talk to, different business unit leaders in those client companies and really figure out sort of how these different companies work. And that's the real appeal, I think, of starting your career in public practice like that, is you just get exposed to so much more than if you're working for a single company early on.
Yeah, that makes a lot of sense. You mentioned investment banking as a potential route. And so for folks that don't go that direction or accounting, but they still want to work in the finance function within a corporation as opposed to at a financial services firm, like what kind of skills do you recommend that people seek out?
It's a good question. I think there's many skills that you learn on the job depending on your role. But when you're first starting out, it's important, I think, to bring, some technical skills to the table. So as you're learning other skills on the job, you come in with adding something to the team. And that something might be, financial reporting experience if you come out of public practice. It might be modeling and, being very good with Excel, for example, and being able to build great models that help a business sort of in forecasting and in FP&A. Or it might be, a very strong skill set on the systems side. So, thinking of an analyst type of role who understands a system and would be a business analyst to help your department, better utilize an ERP system or, some kind of technical tool. But regardless of what that kind of core skill set is, that you're bringing something to the team that's new and different and differentiated. And then, in the role, you can learn other experiences. So I think technical skills is one element of it. The other part that is really important to bring is just a willingness to learn and a willingness to try. I think that's probably the most important thing when looking at new people for a team is, the willingness to really get in there and learn something new and put in the effort to develop your skill set.
That was one of the things I actually wanted to ask you about, getting into kind of the leadership mindset was, what are you looking for when you're looking to promote internally, but an attitude that's open to learning and trying new things and willing to fail sounds like one of them. Are there any other things that you're generally looking for, either in a new hire or a promotion?
Yeah, absolutely. The willingness to learn, the willingness to fail, the willingness to be coachable, to take feedback, to seek out feedback, and then respond to it positively. That's, it's an important quality. So I think many of the things that you mentioned that we're talking about here are qualities more so than skill sets. Yeah. So it's important to develop skill sets because it's technical ability to carry out your role in a very positive way. But it's also really important to come to your role with an attitude of learning and wanting to advance and being open to, not knowing everything and learning new things to fill those gaps. And those gaps, that's an attitude. And some of those gaps might be technical, but some of those gaps might also be, attitude driven as well. And just being able to remain positive in, times of great change or great effort. And, the willingness to put in the effort when needed sometimes. This
concept of coachability comes up a lot when we're speaking with, prospective business to business clients like financial services firms and things. There's sometimes a bit of a generational divide around the ability to be coached up and accept feedback and also to deliver feedback. A big part of leadership is being able to provide effective, constructive feedback for people, and it doesn't always come naturally to people. Sort of on that note a little bit, again, talking about leadership, what are your thoughts around mentorship? And maybe there are a few perspectives you could take here. Like, how did you sort of tackle mentorship when you were more junior in your career? And now later on that you're in one of the big chairs here, like has that informed how you approach mentorship today?
Yeah, it absolutely has. And I think when you talk to people, you'll get different answers about what mentorship means to them. And I think at different stages in your career, you need different things from a mentor and from people that support you. Early on in my career, I worked in public practice. I worked for KPMG, a great organization filled with a lot of great people. And it puts a real focus on their people and, facilitating mentorship at all different levels. And so I got a lot just out of my professional environment that I worked in and through the programs that the firm had in place. As I started to look towards the next step in my career, I actually started working with a professional coach, Tana Hemmingsley. And what we focused on was she was independent, so independent of, the firm I worked for. And what we started to focus on was how I showed up as a leader. And her approach was authentic leadership. And so what we spent time on was trying to figure out, the things that were important to me and my personal values and how those translated into showing up as a leader and making me successful, both as a person and as a leader. And so while that was a coaching relationship, not so much a mentorship relationship, I ended up working with Tana for about 10 years. I found her to be hugely helpful in my progression going into this next step in my career. And then as I left public practice, I started to have the opportunity to work with different executives who I worked for. And as an example, the first CFO to take me around New York into different investment banking boardrooms to meet with bankers and analysts was Dave Hastings. Hugely helpful. We had the opportunity to work together and I learned a lot from him. The last 3 CEOs I've worked for, including Kevin, who I currently work for, I've always had a very strong relationship with the CEOs and able to learn a lot from those relationships as well. So those are, part of that is actual experiences, the willingness for them to bring you along to things that you haven't been exposed to previously. That's been helpful to me. But also, learning to become confident as a leader and be effective in a role was what I have taken away from a lot of those relationships. And for me as a mentor, when I look towards people I work with and team members that I have, I try to develop open relationships where they're willing to share, what their goals and aspirations are. Mm-hmm. And I try to listen to those and together with them, identify situations and things they can work on and projects that help them move forward and get some experience in those aspirations. So instead of, mentorship being a passive thing, I think from both the mentor and the mentee, having some dedicated attention or dedicated thought about how you go about that is helpful. And you can really get a lot out of mentorship, both as a mentor and a mentee. It's really rewarding to work with somebody and see them want to and then successfully progress in their career. And having been on the mentee side as well, it's really helpful to have someone willing to expose, their experiences and help bring you along by utilizing those experiences on your behalf. So I think mentorship is hugely important, and the time spent in crafting those relationships is time very well invested.
It's so interesting to hear you say that because so often we think about finance as being a very quantitative and very technical field, but you're sort of saying some really interesting things here about relationships and mentorship and soft skills and leadership, especially if you're going to ascend to the top of a department or the top of a function and into the executive level chair. It's clear that there are a lot of qualitative skills that are required too. And that's super interesting. Appreciate that insight. I'd like to ask an evolution question, and you can kind of sort of take this in a couple of directions. Over the last 10 or 15 years, how, if at all, has the nature of work changed within the finance function at a corporate? Or if you prefer, how has sort of the role of a CFO changed over that time?
I think technology is playing a large part in how the role is changing and how, the function of a or the responsibility of a finance function is changing a little bit. In the past, I would say an accounting department spent a lot of time generating information. And I think that's transitioning to spending less time on creating that information because, the systems and processes are becoming more automated. And I say this in a way where it's kind of already taken place. This is definitely something that's a continual evolution. The companies I've worked in, you have a combination of newer and older systems. And so it's definitely an evolution to try and take advantage of the automation and everything else that's available to make things easier. But the general concept still holds true, which is as a finance function, we'll spend less time on creating the information, more time on analyzing the information, and less time in creating information in the past and more time in applying that data and using it to project into the future and try and make, better and more informed strategic decisions because there's, more data available. I think that evolution is going to continue to take place and will continue to change. There's some very interesting developments going on in AI that will apply into the finance function as well.
I wanted to touch on that actually.
And hopefully my hope is that, that starts to take some of the tedious work that can be part of accounting and compliance and again, help automate some of that tedium so that the people and their brains can be more focused on the value added work, like actually analyzing it, trying to apply, information to make better business decisions and things like that.
Yeah, that's interesting. I think there's a fair bit of sort of fear going on right now about the unknown and just how much white collar work is going to be changed because of generative AI. And I sort of think of the analogy of Excel. Many years ago, analysts and finance professionals spent a lot of time making calculations and actually like arriving at numbers. Now that's done for them. And they spend more time analyzing that data, to your point, that information and deriving actionable insights. And, I don't think anyone would trade in their spreadsheet. I think that would be completely ludicrous today. So yes, there's always been fear about technology and just sort of changing the way that we do things. But in general, it seems to have just changed the type of work that we do and sort of how we do it and freed people up to do more creative things and to provide value in different ways. So I'm hopeful it'll be something similar here with AI.
Yeah, I agree with that, Kyle. And one other thing to add maybe to what we were just talking about, another thing that's maybe not so much changed, but I've definitely seen it progress is instead of people in accounting and finance, acting in a silo, really, I think the buzzword is being business partners and really understanding the business. But I think that the concept is absolutely more than a buzzword, which is to get into the business, understand, what the business is trying to do in order to be, a better service provider within the business. And I think that probably holds true for more than just accounting functions. You see the same out of IT or HR or any of the sort of standard G&A functions. The better you understand the business, the more useful you can be. And the more time you can kind of spend engaging with other business units and understanding how they do things, the more value you can add. So I think that particularly leads to better financial planning and analysis and better budgeting and forecasting when you really do understand what's going on in the business. So I'm not sure if that's an evolution. I think that's probably always been the case, but maybe being able to free up a little bit more of people's time from, creating information and churning spreadsheets and filling out, compliance type of reports and things like that allows them to add more value in that way.
Something that I'm sort of hearing from that is this idea of data literacy, not just within the finance function, but across the organization. If you're going to be a business partner, you need to know the language that other divisions are speaking. So whether it's around setting and trying to achieve, sales targets or numbers, whatever sort of division it is within the organization, everyone needs to be speaking the same language. What are your thoughts on data literacy broadly?
Yeah, I think this goes back to what we are just talking about of finance people engaging with others in the business. That engagement goes both ways. So part of that engagement is learning about what the business is trying to do and how the different business units contribute to the business. But part of it as well needs to be feeding back, financial knowledge back into the business. And, if you've done a great analysis on something, it doesn't do much good if it just sits on your desk or sits in a spreadsheet somewhere.
Right.
You have to communicate that back into the business. And I think that back and forth communication is really how you create that data literacy and awareness of, for the finance folks of what the rest of the business is trying to do, but also for the rest of the business, to learn from the finance folks who maybe look at things with a slightly different lens than what they're used to looking at it with.
Would it be helpful if more people in the organization had a baseline level of financial acumen? I get the sense that it probably would be.
Yeah, it definitely wouldn't hurt. And again, it's similar to, finance people not needing to go out to get medical degrees to be able to be effective in a medical device or a biotech company. The flip side is also true. I wouldn't expect people to go out and take accounting courses or get an accounting degree by any stretch. But certainly, some level of financial literacy just makes that conversation easier and being able to go back and forth between the two. I will add, currently working at Kardium, I work with a lot of engineers. We have, 250 people. And sometimes I joke that I was the first non-engineer to come on board, which isn't quite true, but
maybe close though.
Maybe close. And, as a general breed, all the engineers I work with are very numbers literate and, they're very quantitative, similar to accountants. So it isn't an easy relationship that way.
If you were starting your career today, what advice would you give yourself, knowing what you know now?
I probably wouldn't change a whole lot. So in terms of advice, I wouldn't go back and do things differently. I think the path I followed, I'm really happy with. Some advice I would have is to spend even more time learning about the businesses that I got a chance to be exposed to, which is hard to do. When I was a junior accountant in public practice, there was times of the year where you're just very busy. And it's easy to look back and say, well, I wish I would have spent more of that time sort of wandering around the businesses and maybe talking to the business development executive about what he or she does in that part of the business and learning more. Yeah. That's hard to do if you're already kind of past max capacity. But as a general sense, I would really sort of go back and appreciate the opportunity of being exposed to so many different things and learning so many different things, and simply try to learn even more.
This is good advice. Never stop learning.
Never stop learning. And it's never too early to start.
What would you be doing if you weren't a CFO?
I would love to say that I'd be playing the NHL, Kyle, but the honest truth would be I'm very happy that I've been able to be successful in the CFO role, and certainly a hockey career wouldn't have worked out. I do really enjoy sometimes doing things with my hands. Part of working in a somewhat virtual role, I spend a lot of time in spreadsheets and talking to people. And sometimes in my spare time, I do, really enjoy getting out into the garden and doing something physical. So sometimes I like to think that if I wasn't in a financial role, I would be doing something that's much more physical and maybe out in nature. But the reality is I really enjoy what I do. I really, working at Kardium is an amazing experience. It's a great company. I get a chance to work with a lot of very bright individuals, and I get to, bring my financial experience and my accounting experience to the table and feel like I'm really making a contribution to our team. And that's a great feeling. So I'm not sure if I would want to do anything different than what I'm doing right now.
In a previous chat, you mentioned to me that you've been involved with a number of corporate transactions. I think you had said the sale of a business, a spin out, some partnerships, maybe certainly some financing rounds. And these are, I think, outside the normal course of day-to-day business and really, in some cases, probably pretty high profile. What's it like to be involved in a transaction like that?
I would say that transactions are always exciting because they're different than the day-to-day business you're normally in. It's never an individual that does it. So you work as a team, and each team member brings something different to the transaction, whether it's in the planning or the execution stage, especially with the larger transactions when it's really impactful in the business. It's important that you feel you're making the right decision for the business and then executing it in the right way without making any mistakes along the way. And you're also trying to balance different stakeholders and each of their motivations. So I really like all of these elements. And then since transactions are generally a tremendous amount of work, there's also a real sense of accomplishment for the team when it
Right.
goes well.
Many members of the CFI community are investing enthusiasts, and in fact, many are also professional investors. So broadly speaking, are you seeing any interesting or cool trends in the health tech, healthcare, biopharma space? Like anything they might want to be cognizant of when it comes to their own portfolios?
Absolutely. I mean, to speak about Kardium here, in our particular space being atrial fibrillation, there's currently a huge wave of new and changing technology that's taking place. And it's really disrupting, the companies that currently hold the majority of the market share in the business. And it's also improving diagnosis and treatment for patients, which is really important. As I mentioned at the start of this, Kardium has just started its IDE study, and we're potentially about a couple of years away from having regulatory approval for a commercial sale of our device, which is super cool for us as a company. But it's also really great for patient outcomes, which we anticipate will improve. And it's also an excellent opportunity for investors to look at a company, whether it's a company like ours, which is a little bit smaller, or whether it's some of the more established players, and seeing how they, participate in that same wave of innovation in a space that's quite large.
Hmm. On the subject of investing, we went through an extended period of very, very low interest rates, and it sort of created an environment where a lot of companies were looking to grow at all costs and capital efficiency completely out the window, profitability, et cetera. And so that's changed, obviously. And I'm curious to hear how, if at all, that's impacted Kardium. Like, you're in an industry where there's very long turnarounds, right? A lot of research and development, a lot of testing. Like, has this paradigm shift changed the way that you're thinking about the business?
I wouldn't say it's changed the way we're thinking about the business. You mentioned profitability, efficiency, quality, differentiation from competitors. That stuff should always matter and be a focus for any business. I think the market got fairly overexcited for a while, and now those fundamentals are really coming back into focus, which is great for cardio. We have an amazing technology and company that presents we think, a great opportunity for our investors, both existing and new. And I think those fundamentals have always mattered, but I think people are just drawn back into focus with a tighter capital market on really understanding and focusing on those fundamentals in their investments.
Right. They've always mattered. They just matter more again,
That's
which
right.
is probably healthy. So for our listeners on the other side of the negotiating table, those that are maybe in banking or other fields within financial services, is there anything you can tell us about what you're looking for when you meet with a prospective financial partner? Like maybe it's a commercial bank for cash management services or credit. Maybe it's a potential equity investor. Like, what are you wanting to see from a prospective partner?
I think from a service provider, so you mentioned, banks or cash management or any of those functions, there really is an interest in the business, a willingness to be a partner in the business, which again sounds a little cliche, but what I mean by that is just willing to take the time to learn what we're trying to do, and then be thoughtful about how they can actually help us progress our objectives as a business, as opposed to just selling the service that they are trying to bring to the table. As an equity investor, the tables are turned a little bit. Obviously, there we're competing for their capital with potentially other investors or investments that are out there. So there, we try and have that same philosophy, which is transparency and openness in terms of what we're doing, and being clear on our messaging, so that they can make a good and thoughtful investment decision.
That's interesting. Obviously, having worked in banking, I've tried to negotiate and pitch an awful lot of business owners and finance teams, and something that we generally teach here at CFI is to try to be more than just a facilitator of a transaction or a seller of a product, but to really serve as an advisor and care and be curious. So it's cool to hear you say that, because I think it is important. I think it means a lot. You're not just there to close a deal and make your quarterly quota. You need to be there for your clients. You need to be willing to listen and open to learn.
Yeah, I
Is
think
there,
you hit the nail on the head. It's not transactional. It's a relationship. And any important service or any important service provider is a key relationship for a business. And it's something that takes time to develop. And I think the way you framed it there was a good approach.
Is there a book or like a speaker or a thought leader that you found really insightful or really helpful over the course of your career that you'd maybe recommend to our listeners?
Yes, definitely. There's a couple of things. I really like the work that was published on authentic leadership by Tana Hemmingsley. As I mentioned before, I found her approach to be really useful as I was crafting my career, and really useful to me both as a professional and as a person. Also, more recently, I really like the Playbook series on Netflix that explores leadership sessions from some of the greatest sports coaches in the world.
Very cool.
I do think there's a lot to be learned in sports that can carry over into a corporate career as well.
Yeah, I completely agree. Koert, you've been very gracious with your time, and I thank you. Where can people go to learn more about you and about Kardium if they're interested?
Well, we're hiring for great people in a variety of different roles right now. They range from technical engineering roles right through to accounting as well. So I'd really encourage people to check out Kardium at kardium.com or follow us on LinkedIn, Facebook, or Twitter.
Okay, wonderful. Thank you. We'll be sure to include those in the show notes. And for our listeners that are interested in the finance function and some of the roles that exist out there, CFI has a ton of resources on this, including our career map. And we'll be sure to provide a link for that as well. Koert, thank you again. Really appreciate your time. And to all of our listeners, until next time, never stop learning.
Thanks for listening to this episode of Net Learnings. This podcast is powered by CFI, an organization on a mission to enhance the skills, knowledge, and productivity of finance and banking professionals. If you enjoyed what you heard in this episode, make sure to follow Net Learnings wherever you listen to your favorite podcasts, or visit us online at corporatefinanceinstitute.com/podcast. See you next time.